Good morning, everybody. It is Wednesday, May 17th. It's OPEX week. EU CPI has already come out and it was in line at 7%. No big deal, top or bottom, blah, blah, blah. And as we go in today, I'm going to start off here. We'll start off, let me drag these over. I'm going to do a lot of dragging. Futures. So the Dow turned around, put in new 5-day lows yesterday. And obviously being oversold, like we were talking about, started to have a little bit of a recovery overnight. A little recovery. You can obviously see your upper Keltners are pointing down very aggressively. So there was a lot of damage taking place yesterday, a lot, and it was a lot more difficult to see if you were only looking at the indexes, where, as you see here, you had your Amazon 2%, Google 2.5%. NVIDIA, Microsoft, Apple, much higher earlier in the day on NVIDIA. Microsoft, you had your AMD, which is over here 4% for the day. But you are looking there at just a plethora of red. And again, you're not seeing it on the indexes because of the weight. But what we did see again yesterday was another 25% range, less than 30-point range. And on your calls, on your puts, playing them just individually, is your timing has got to be pretty damn spot on. And in order to have your timing pretty damn spot on, your attention span and your focus have to be spot on. And when you're getting these really tight ranges like this, where, 41.36 right there, did it again. Monday's low, 41.10. Yesterday's low, 41.10. We're playing the repetitive game of back and forth, ping pong, back and forth, ping pong. But back to the futures. Again, aggressively oversold on the Dow. Major move back up over here so far, up 100 points from the close yesterday. Here was your NASDAQ, and I was sharing this with Dragging These, Vince. This is where we hit here on the NASDAQ. This is my big hello. This is your February 2016 low up to the September 2018 high, almost 100% move on the NASDAQ, down to your December 2018 low. And that's your 200 extension, and it hit it perfectly yesterday. Now, it is up above the 20% from the all-time highs level. We're just repeating, talking about the sell divergence on the bigger, wider time frames with the overbought weeklies on the index, and it's useless to discuss except to remind everybody that it's there. And when the day does come, when it is corrected, it's one of those ones where you don't want to be Mark. This is never going to fall. It's never going to fall. We're always going to go up. We're calls and puts and blah, blah, blah. And, Mark's no longer with us because, like Elon Musk, I do what I want to do and I say what I want to say. And if it's going to cost me money, then fuck it. So be it. I can donate that money to the kids that was in his membership anyway. I donate plenty of my own money to them already. So 5-day moving average right here. And what I have noticed for years when we are running on a one index move with the NASDAQ, when you get down to the 5-day moving average like you had over here yesterday, that's the dip that you're getting, and you're not getting anything more than that. You're going to need a headline in order to make that take place. Now, what we've got over here on the ES, the 10-day moving average is about to go above the 5-day moving average, which I don't know. I mean, I've never really read books about the stock market, but I don't see that being bullish. But here we are again in the exact same place at that 41.35, and we have been in this 60-point range for what seems like a decade. Short 41.65 when you see it, long 41.01 whenever it shows up. It hasn't been showing up because we've been holding over here at this 41.20, which I'll show you in a little bit. But just to not neglect the Russell 2000 sold off hardcore yesterday, right down, broke the lower Keltner, and is now just trending flat right on the 2018 highs. Don't know how you can call that bullish, but whatever. So come back onto where we are. So again, it's just being very difficult to be where you're at in trying to play the calls and puts. I have put over here in the column the 4140, 4135s from yesterday, getting 150%. And the reason why was when you scroll back onto your Monday email, and we go through where our trades are, looking at those individual names, and we come down here into our SPX trades. And so Monday, 4170, 4165s, full credit. 4160, 4155s, full credit. 4145, 4140s, full credit. And then when I put this, I'm crazy to do this, but trade the Tuesday, 4140, 4135s, they were getting over $3. And I put out the PDT. PDT meaning the guys with pattern day trade problems that have accounts less than 25,000. They can't do day trades. So to go out and buy a 1 DTE, 1 day out, the next day they can close that trade if they want to close that trade. But unfortunately, I have a history of giving out, spread trades that wind up closing full credit. So there. Tuesday, 4165, 4160s, $1.45, and yeah, again, full credit. So go back into yesterday, and yesterday, discussing what it was, what it is, what this is going, where that's going, and nothing really being anything, you know, that you can move. But again, here on SPY, highlighting 41016. Where'd you come down to yesterday at the close? 41016. It's a goddamn video game, man, I tell you. And it is really easy to play when you play the right thing at the right time. So, again, yesterday, 4160, 4155s, only getting 50 cents, but yeah, full credit. 4145, 4140s, yeah, full credit. And the risk trade was very interesting because it was the QQQ 328, 327s. I don't give out the QQQ trade because it has fucked me in the ass. It's worse than being in prison showers. And drag it on over, and yeah, yesterday you got that pop into lunchtime, which seemed as if, oh, this is never going to end, up to that 328.90. You got a gap here from August that goes to 330, and you wind up coming down and closing here at 327.16. 327.16. So though that spread, you had to pay $16 in order to close it. Well, it was getting 40 cents or better, so you only were able to get 20 out of the 40. So on your, call it 55, 60 on risk, you only were able to make 20. So yeah, kind of sucked. And I threw out the I'm crazy to do this but trade, and it was the 4125, 4120 calls at 350, and record shows we closed at 4190.90, right below that 4110. So again, there's really nothing to talk about other than this NASDAQ. And I've looked at this NASDAQ 19 different ways. Look, we got three different things here, okay? And I'm looking at the NQ futures. So let's just go ahead and put this here. 13,740.75, right? 13,740.75. That is your August high. All right. And we'll go make it blue. This is where we're at. I mean, we're banging up into this level, and as aggressive as we want to be using this as far as our extension, because I don't believe this was a 1-2. I don't. 14,000 would make a perfect ABC. And where we're at, just so you can see here very clearly, is we're at 13,554. You've got your 50 retracement of the 2022 drop, less than 100 points above. And then you've got your August high, less than 200 points above. So this thing's got to be close to finally just, getting rid of this so that we can move on and start to do other things. NVIDIA. Now, on NVIDIA, going into my very wide point of view, this is why I had the 1, 2, 3, because it was a perfect little setup for a 3, and this bounce being a 4 coming up to that 291 back over here, this high over here in March of last year, and that being, you're pretty damn, full, and yesterday you pierced through it. So what I've got to do now is I've got to turn around and look at this as being a 1, 2, 3, this being the wave 3, heading up here to this 200 extension, and then eventually looking at where a wave 4 dip will return to. But you have everything in this market all lined up into 7 stocks. The most unhealthy high school I've ever seen. You got 500 kids in high school, 7 of them know how to do math. That's basically what we've got going on here. So with your VIX, again, with the VIX, the same thing, using it for our scalps when we are over here playing that 1811. When the 1811 shows up, okay, that's it. The dip is over. It's never going to go anymore until the day when it does. So that's where we're at on that. And I will just leave you off with a little bit of attention here. It is 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trading sessions as of today. Should we not dip below 40.69, that we do not have a minus 1% visit. We have had a plus 1% visit back after the minus 1% visit, which was the day that Apple reported on May 5th after we had closed red Monday, Tuesday, Wednesday, Thursday. So it made very clear fucking sense that we were going to get a move to the upside that day. It just happened to move a little bit too high, how it closed at 41.36. So there was your little analysis of where we're at, where we're going, because where we're going is, again, the same thing. We are going sideways. Sideways, sideways, sideways. We are a sideways snake sidewinding, visiting 41.36 virtually every day and avoiding breaking down below 4100 virtually every day. When the day comes that 4100 breaks, today, tomorrow, Friday, Monday, Tuesday, Wednesday, Thursday, prior to the day, you'll want to be involved in what we're doing, which is the easiest way to do it, and it is selling these call credit spreads. So have a fantastic cup of coffee and get ready to spend electricity on watching your 1-minute chart look like it's going all over the place, when in reality we're pretty much stuck in this tiny little range. Happy Wednesday and happy hump day. Make sure and squeeze one.